because you're in the mortgage game and the real estate game. So like, what are we talking here? Like 50 hours a week?
Yeah, 5 Ps. As in anything else in life, proper preparation prevents poor performance.
Younger people today are expressing growing concern that they're not going to be able to buy a home.
I think the problem comes in when the order and the overall authority exceed the control and the service.
It's the immediacy, it's people being able to reach you when they text you, and it can be a deal breaker if they can't get a hold of you, right?
Over a decade, value increases in most places. It's a good investment because the alternative is renting, and 100% of the funds you are paying are going into that landlord's bank account, not yours.
Well, welcome. We are back for another episode, and our guest today is a Phoenix area realtor and mortgage broker who's been in the lending game for a long time. And today we just want to pick his brain about home ownership, borrowing for owning a home, and just different tips on getting the right financing. And we're happy to have with us Dahan Johnson. Dahan, thanks for being here.
Hey, first and foremost, thank you so much, Mike, for giving me the platform. I'm looking forward to having a productive and enlightening conversation today.
No, I appreciate that, and we appreciate you making the time. Now, you're a busy dude because you're in the mortgage game and the real estate game. So, like, what are we talking here? Like 50 hours a week?
You know, I stopped counting the hours of work, being that it can be very overwhelming, and you are really at the behest of your client, and the client doesn't really have the same kind of office hours that we might. If I have a client that's working full-time, that's in the market to purchase a home or under contract or looking to list, oftentimes I'm working around their schedule, which starts after work. So there can be nights where I am up answering emails, phone calls, and text messages, or doing market research, and it is 6, 7, 8, 9 p.m. Now, as I scale my business, I'm trying to keep some guardrails. That way there's that quality time with the family and separation. That being said, I'm blessed enough to have a supportive wife and family that understands that I'm in the service industry, and we aim to serve. Therefore, availability is essential in this business. But I would say easily 60, 70 hours on a busy week. But there are definitely those weeks where I'm working your typical 40, 50 hours.
Yeah. It's that's what it's all about. Like, if you're not going to make yourself available, you're not going to get business, right? I mean, that's the world we live in today. It's the immediacy, it's people being able to reach you when they text you, and it can be a deal breaker if they can't get a hold of you, right?
Yeah, the reality is speed kills. And you said it perfectly, that communication is the key to opening almost every door you can imagine, regardless of what the relationship is. And we could open up our email or our social platforms right now and scroll long enough, you're going to run into a realtor, a loan officer. So there's lots of options out there. And what's going to set yourself apart is going to be your service-oriented approach, as well as being available, being able to communicate, and most importantly, being able to offer solutions that solve big problems.
100%. And, I want to dive right in, man. This is your area of expertise, and we're in this weird, like, hyperinflationary state. There's a bit of a downturn right now, and I think the housing market has come down a little bit in recent months. You correct me if I'm wrong, because you're going to have your hand on the pulse of this more than I am. But I want to just start, like, right from the beginning. Like, what advice would you give to that first-time home buyer or that person who's planning to make their first home purchase in their lives?
Yeah, 5 Ps. As in anything else in life, proper preparation prevents poor performance. In this market being so volatile and having this smorgasbord, as it is, of challenges, you mentioned inflation. Everyone is feeling inflation, regardless if you're in the mortgage industry or real estate or not. Go grocery shopping today. Go to the gas pump. Pay your taxes. Pay insurance. Look at the interest rates on personal loans, business loans, and it's really inflated. It's impacting so many people, and it's definitely parallel in the real estate world. So you have the challenges of inflation, where your dollar doesn't go as far, and you also have the emerging increases of values of properties, or the price point at least, in every market, particularly here in Arizona. So back in 2020, we saw everyone shut down with the global pandemic. And the government then pulled some strings to be able to recorrect consumerism. And the best way to pull that lever is incentivizing behavior when it comes to that same consumerism. So they decreased the entire interest rates across the country, which opened up the doors for a lot of people. But the impacts of that were that it wasn't just home buyers in that market looking for properties. It was also investors and large hedge funds that were buying these properties up and highly inflating the demand. And now you have people paying 20, 30, 40, sometimes $100,000 over asking, which caused an increase of the prices. And those prices since 2020 have not gone down. If anything, they've continued to rise. Now, that blip on the radar in 2020 with interest rates being low, we all knew in this industry was not going to be a forever thing. And the government pulled its reins back probably after about 2022, and you saw them ratchet back up to 7%. And there was this frenzy in the market with a lot of consumers that just expected rates to stay at 2, 3% forever. And there's complaints about, hey, rates are too high. Rates are not sustainable. But the reality is, if you look back historically, 15, 20, 30 years ago, 7% is probably around the average. There's been rates as high as 14%, but with the trifecta of inflation, prices, and interest rates, those buyers that were able to be in the market and look at purchasing a home for the first time at $300,000, $400,000, they're now unable to qualify because the rate's high, the price is high, and their income has not changed. So that's where we are right now.
Yeah, it's kind of a scary place, and I've talked about this in previous episodes, but just the fact that like younger people today are expressing growing concern that they're not going to be able to buy a home just with the craziness, and people like yourself, or I have a feeling I'm a little bit older than you, but it was still something attainable back then, but they're going to have to earn that much more just to make ends meet, just to be able to own a home. And rent prices have not been very forgiving either. Those have been really high in a lot of the major US markets. And so a lot of people are saying that unless you already have assets, whether you have a stock portfolio or investment assets or property, you're benefiting off that inflation in a sense because your assets are worth more. But if you don't own assets, you're in a real predicament.
You are. And I do want to change the energy because so many real estate professionals and mortgage brokers in this space, in this era, have really been speaking to the reality, but it comes across as doom and gloom. Now, I'm not one to try to paint a picture contrary to what the reality is. At the same time, I don't want to just focus on the negativity. There are still some opportunities for someone coming out here to get in this market looking to buy a home, but that is going to require some more due diligence, having the right team, and strategizing effectively to make it happen. Being aware of programs for first-time home buyers, maybe thinking outside the box and not just doing it by yourself. With the median incomes being where they are, it's going to take more than one person in many cases to be able to qualify for a home. So what does that look like? It might look like you could be purchasing a home with a family member. You could be purchasing a home with a significant other, with a friend. And we do want to go about this the right way. Of course, we don't put anyone in a bad situation and stuck on a property, but there's ways that you can structure that contract and agreement where you can acquire a piece of property and not have to do it necessarily by yourself.
Are you seeing that just on the lending side? Because I know you work as a realtor and a lender, but are you seeing people get more creative in finding ways to qualify that you hadn't seen in previous years?
Absolutely. So whether it comes to loan programs, whether it comes to the way that someone strategizes with a co-borrower, when it comes to different incentives that you can get from the realtor, whether you're looking into going to a multifamily versus buying a single family residence where you're yielding the existing income and rents from the tenants that in that building, yes, creativity is now. That is going to be the future unless we're going to see the government do a big pullback on the overall interest rates or the decrease in prices. And I don't see either one of those happening anytime soon. There may be a change with this election cycle. Hopefully, we get a president in office that recognizes what's happening across the country and we can get some incentivization of rates going down. But the bottom line is, unless those rates come down by 1.5%, it's still not going to have that big of an impact if home prices are where they are.
And it's funny that you say that because the day we're recording this podcast, which is not always when we publish it and release it, but the Dow, I think, was down 400 points almost on the news that the Fed was not going to cut rates. They were going to stay the course until September. And so investors panicked and there was a big sell-off. So yeah, just the way these governments try to create this, there was all this talk of this soft landing several months ago, and just the way money is managed at the top is very questionable. We won't get into that conversation, but yeah, I don't know, man. I don't know if I trust the government to manage this effectively. Just my opinion.
Well, I don't think it's an opinion at this point. I think anyone that has critical thinking trusts behaviors, right? I listen to what you say. I take it with a grain of salt. I believe what you do.
Right.
And the Fed has given publications and notices that they intended on dropping the interest rates several times this year.
Yeah.
We've only seen one drop this year, less than 1/4 of a point. So consumers are following the trends of the government and of the investors. If the investors lose confidence, that signal goes to the consumers and that demand goes down.
We're in this weird market right now for the foreseeable future. As you mentioned, we don't see this changing anytime soon, but who knows what happens 6 months to a year from now. But is there ever a wrong market to buy a home? I know people can't always time the needs of life. People finish school, people get that promotion, they want to upgrade where they're living. Is there ever a time where it makes more sense to rent for a period of time versus buy?
And I might get some hate from this, but absolutely. It is particularly a good time for you to buy when you are ready. When your financial picture matches a desired outcome, and that is what you want, I believe it's in your best interest to do so. If you look at year over year, decade over decade, value increases in most places, it's a good investment because the alternative is renting. And 100% of the funds you are paying are going into that landlord's bank account, not yours. But on the other side of the coin, if you're considering buying a home, it's important that you do your due diligence because it may not be the best time for you to buy a house right now. If your debt to income is too high, if you don't have a strong position of reserves, if this is not something that is sustainable for you with the other expenses that come with buying a house, then no, maybe renting is a better time for you if you got to improve your credit or your income or your assets. That would be the best time for you to make a move when those things are in alignment. But if they are in alignment, I would advise take that into consideration, and it could be a great strategy to take ownership versus being a renter.
Yeah, that makes a lot of sense. And, with these inflated prices right now, there are some homeowners out there that are probably contemplating, hey, maybe I should sell now because I can, run to the bank with the proceeds of the inflated prices. So how does someone determine the value of their property outside of market conditions? Like if somebody wants to sell their home, what are some factors that might cause them to sell under market value? And how do you best work with your clients on that?
Yeah, traditionally, if someone is looking to sell a property under market value, it's because they're either in a distressed situation or there is an immediate need, or it just benefits the overall dynamic they have in case they're maybe relocating somewhere. However, to answer the first question, the way that market values are typically analyze is based on comparable sales in that area. So a realtor or a appraiser is going to look at the most recent homes that have sold that are like in kind. And we have to compare apples to apples here. Unfortunately, if you're in a 4.2 with 3,000 square feet and you're trying to compare it to a 5.3 that has 4,500 square feet, as much as we all might love our home, it might not be the same value. In many cases, it won't. But that's usually how values are going to be addressed. And there could be some caveats, right? People take lots of pride in the way they prepare their home or renovation they might put into it. So if you've done a major renovation, you've added square footage to your house, you've changed your kitchen, your bathrooms, the areas that people spend the most time in, that could yield more value in your home. Adding a pool, those kind of things can add more value. How significant is really at the determination of an appraiser.
Is it hard to work with some buyers? Like, is there buyers that just don't get it, or they dig their heels in the ground on how much they want to sell it for? How do you handle that as a realtor?
Yeah, absolutely. So we're not conflating the two things. A seller would be the one that's selling the house. A buyer is the one acquiring the property. And yes, sellers can be very emotionally attached to their property. And oftentimes, or in some cases rather, expectations are in a direct alignment with reality, because we can all be attached to something because we spent time in the kitchen cooking with the family, in the living room watching our favorite shows, in the backyard for 4th of July. So we have become vested in this home, whereas the buyer is looking for creating their own memories. And for them, it's often a blank slate and has to check off the right boxes. That's where we go back to being able to redirect them and position it to where there is going to be a win-win on both sides. But yes, definitely there are those times where, sellers have unrealistic expectations.
Yeah. Is there ever a time where, you don't have to answer this if you don't want to, but have you ever had to walk away from a client just because they're so set in their ways, or they don't want to take your advice, and you're seeing red flags everywhere with trying to represent them? And how do you deal with that?
On the realtor side, I haven't experienced that yet. On the mortgage side, I have. I'd say it's more rare on the mortgage side because the numbers are the numbers. We're looking at, closing costs, interest rate, monthly cost, homeowners insurance, mortgage insurance. These things are empirical. They're not subjective. Whereas the house oftentimes has the emotional attachment to it that is subjective. But in the times of, 2020, where there's this fire sale of interest rates, and you're seeing the advertisements and your neighbor's cousin's cat's barber saying, I just got to refinance at 2.75%. There were many clients that expected that they got that exact same rate. And two situations are rarely identical. You have to compare what someone's credit score is. You have to look at what someone's income is. You have to look at their time on their job. Have they done their taxes? What bank is being used? And those criteria can have a sliding scale on the impact of interest rates. And during that time, because so many people were being able to take advantage of it, low rates below 3% was expected to be the norm for a lot of people. So I have had clients where I presented them, hey, here's what you qualify for, 3.49%. And they were in an uproar. Hindsight's always 2020. I would love to have the conversation with those clients right now if they think that 3.49% was an ungodly rate. But yes, I've definitely experienced that before.
Yeah. Yeah, for sure. Talk about some red flags when choosing the right neighborhood, and how you deal with this as a realtor. What are some things people should look for if they're considering a neighborhood, or they are a first-time home buyer, and things they might easily overlook if you don't help them?
Sure. What is your social dynamic? So are you married? Are you single? Do you have children? What are their ages? What are the school districts that you're moving into? What kind of amenities are around that area? How close is the Whole Foods or Aldi or Trader Joe's or Fry's? I mentioned all those companies. Y'all should sponsor me. But wherever you're shopping at,
Yeah.
where are those locations where you're shopping? Because that commute will play a part into your overall experience. You might not think about that when you're living in the community that, hey, this, grocery store I'm going to is 3 miles away or 5 miles away. Think about that. How close are the nearest interstates to you? What's the proximity to your job? What kind of development is happening currently? And what's projected to happen in that particular community? And this should have probably been the first thing is, what does crime look like?
Yeah.
What are you going to experience in that community with the neighbors? Like, all those things are very important to take a look at, as well as what homes have sold recently. Maybe you're going to be there for 3 years, 7 years, forever. If it's not forever, you should be thinking about an exit strategy. Are the homes in your area appreciating? Is it stagnant? Are they depreciating? Those things should be playing into your perspective. Another thing, HOAs. You should be thinking about what are the particular CCNRs of that community. If you love having a big Halloween celebration, want to have decorations, or you like putting these lawn furniture in front of your house, or parking your car on the street, or maybe you get behind because of work or other priorities and you can't get to landscaping, or you don't remember to take that trash out of your front yard, you could be walking into a situation that's very, very confrontational.
Yeah.
So looking into the HOAs and what they allow as a primary resident and as a potential investor, if you're looking at Airbnb or property, is critical.
Yeah. And you mentioned HOAs, and that's such a controversial issue because you hear these nightmare stories about HOAs, and I'm in an HOA, and ours is pretty good. They don't do a lot, which is fine, but I mean, they police the neighborhood, they make sure things are to code by their standards. And I think as an investor in property, and in a home, I feel like it helps keep the neighborhood to a certain standard. There's a certain level of cleanliness. There's a certain level of expectation when it comes to upkeep. You can't leave, 16 cars on the front lawn. There's rules that people have to adhere to, and if they're not adhered to, then there's enforcement action that's taken. And I think that's a wise thing to consider if you're worried about which direction your neighborhood could go in. Because I've gone to visit previous neighborhoods I've lived in, and some are a lot, they're still nice, and some have kind of gone down a little bit. And if there was an HOA there, that might have kind of kept things more consistent. But that's a big issue that I think sometimes people overlook when they don't join an HOA. Does that make sense?
It makes perfect sense. And I have mixed feelings about HOAs. I do believe that the general premise is to be able to provide order, some form of uniformity, as well as control in service. I think the problem comes in when the order and the overall authority exceed the control and the service. When those things don't have a good equilibrium, that's when you begin hearing these horror stories that you're talking about. Like, what am I paying for? Am I getting what I'm paying for, or are you just collecting money from me at this point?
On the topic of location, there are states and cities here in the U.S. that have more lagging home prices. It really depends where you are. If you're in a more central or bustling city, prices are going to be higher, and that's going to be reflected in that. But since a home is the biggest investment most people will ever make, does it ever make sense to choose a different city or like a distant suburb for a home buyer just to save on costs? It's probably like a lifestyle thing, but what are some things people can consider when they're looking at a property and they might be pinching pennies to try to make that purchase?
That's a great question. I'm not sure if I'm able to give a drop for my YouTube channel, but this question is
drop it, man.
For my most recent episode, and it was called The Great Migration. That's happening right now. The answer is yes. There are several cities across the country as of right now that people are relocating to en masse for several of the things that we've already touched on earlier. Affordability, the fact that they can work remote, the cost of living, inflation, the cost of being able to just survive and thrive in these particular cities, job opportunities, businesses leaving, uh, you know, just the quality of life that you have. So, yes, it does make
Yeah.
sense in the right situation to relocate to an area that is going to be better for your overall lifestyle.
Yeah. When you say migration, I can't help but think of the state of California and how, from what I understand, their numbers are actually dropping for the first time in foreseeable history, whereas their population was always increasing because there's so many people that are exiting there because of just the ongoing expense of living there, whether it's in the form of property taxes or state income taxes, which are so high above, the median here in the US. But yeah, migration, I just think California. I think of Elon Musk talking about how he's moved everything to Texas. Um, that's a big one for our listeners in California. A lot of people are probably feeling that and considering that.
Absolutely. So, the channel that I was mentioning earlier, it's called Dehan Develops. That's my YouTube channel. And Pew Research shows that San Francisco in particular just increased its average cost of home right over $1.4 million. Now, San Francisco, of course, is an extreme example, but you're seeing these increases all over the country, particular in these mega cities like your San Francisco, your San Jose, your Los Angeles, LA proper. You're seeing it in places like Atlanta. You're seeing it in Florida, of course, in New York, on the East Coast, Chicago. So you're seeing many people from the Midwest, far West Coast, and East Coast relocating to a lot of places in the middle of the country. So the Midwestern states like Fort Wayne, like trying to think, Iowa, some
Hmm.
places even here in Arizona like Maricopa, Goodyear, Casa Grande. You're seeing people move to these areas that were previously less desirable, but because of the infrastructure being built and the cost of living and the price point of a home, it's becoming to be a more desirable place for people to move to.
Yeah. Yeah, they're building so much and developing so much in some of those areas that you named that they might become more desirable than the actual city limits, some of those suburbs.
They are. Places like Goodyear and Maricopa are having month over month, year over year
Yeah.
growth, where they're becoming more and more desirable. And you're even seeing that represented with the infrastructure being built around the
Yeah.
cities. With that demand, you'll see investors put more, restaurants and event places and parks and shopping centers, and small business owners will come those areas, and that will drive demand.
Yeah. And even just with hybrid work situations for a lot of people, the commute, I know there's still rush hours in most major cities in the US and places like Canada, but I think that as time goes on, more and more people are working from home. They have these hybrid situations. And so they don't have to be within city limits to have the lifestyle that they desire. Whereas 20 years ago, everybody was on a commuter train or a bus or sitting in traffic for 2 hours a day trying to get to work. All that is changing so much now, and I think it's just opening up these markets that weren't as desirable in the past. So much has changed.
Yeah, with the advent and the emergence of the ever changing internet, where we can now work remotely and you can live anywhere, it begs the question, where should that anywhere be?
Yeah. And like, look at this podcast. You called me 2 hours ago and you're like, are we linking up somewhere or are we doing this online? It's like,
Right.
no, man, it's online.
It's like, no, just log on.
Yeah. Right. Isn't that convenient? Because you can be in your
Yeah,
own office.
that's life though, right? Now,
Yeah.
now life is as simple as log on.
Yeah. It's crazy. I mean, I love it. It has its drawbacks because I know people can feel isolated. I know a lot of kids felt that during the pandemic where they were always in a classroom setting in more social situations. And then we had that weird year where nobody went to school. And so it has some negative impacts on people, I think, as far as isolation can go. But even still, I mean, I haven't left my house today, but I've already interacted with several people online. So, you know, I'm in my cave, but I'm kind of still in touch with the world. You know what I mean? So I think I think this virtual uh, situation that we're all in now is still beneficial in a lot of ways. Does that make sense?
I agree. It's really a double-edged sword. Too much of just about anything without moderation can be toxic, and I hate that word being overused, but I believe it's true.
Yeah.
If if you spend the vast majority of your time online and not interconnecting with other human beings, I believe it does something to you emotionally and mentally, and even physically if you're not out and about. I think it's great that you've created that dynamic for yourself to be able to work remote but still be able to connect with people, and that's very parallel to the world that I'm in as of right now, right? Because everything is so heavily distributed online.
Yeah.
You can get your research online. You can connect with people online. You can send text messages via phone. The days of having to go meet with someone in an office or have a coffee, it still exists, but I believe it's diminishing as people, you know, aren't required to go into an office,
Yeah.
and they can do it right here, and they can e-sign. So that technology definitely has its advantages, but as you alluded to, I share the exact same experience with my children.
Hmm.
During the pandemic, they had no other option but being online,
Yeah.
and I can definitely speak to the disadvantages and the fallout of them just being on the computer versus connecting with other kids and being out the house.
Yeah. I think it's impacting humanity on a social level too. I think younger generations don't have haven't aren't developing the same social skills as older generations who had to get in front of people, who had to talk in groups of people around them. It's so different now, and there's definitely a negative side to it all. And I know in situations like yourself where you're doing the kind of work you're doing on the mortgage side, you probably don't have to see too many people, I'm guessing. But on the realtor side, you're doing showings, you're having to meet with people. It's probably going to stay more social. Are you doing a lot of virtual home tours with people?
No, for me, it's been traditional so far, as you mentioned. And before we even had our meeting, I was doing a showing. So I believe you have to press flesh or touch the property in many cases, not all, to be able to really make the right decision. Even if you have the facts around the property, how many bedrooms, bathrooms, square feet, lot size, it doesn't paint the same picture as you walking into the house. Something about the energy you get when you go in the house that helps them make that decision. And I can speak from my own experience in shopping for a home, how that feels. But there are definitely those situations where you have an investor that all they need is the numbers. All they need is how many rooms, how many
Yeah.
bathrooms, lot size. Do the numbers make sense? And that's it. So I believe you're correct. It's going more and more into that virtual direction.
Yeah. Yeah, I can remember like several years ago, my wife was in another state. We were living in a different state at the time. And I remember going through some showings with realtors and having her on. This is like before the Zoom days. I'm starting to date myself, but this is like the Skype
Skype
days.
days?
So
Yeah.
I was like jumping on Skype with her and like, yeah, like going through homes with her, and she was checking stuff out. And it's just amazing how we use this tech, and I don't want to dwell too much on that, but she was able to see homes that she loved without actually setting foot in them. And we ended up making the right call. So it can be done, but I know what you're saying. You want to stand on that doorstep. You want to walk through that house. You want to get a vibe for it. And it's harder to do that online.
And what you can't do is you can't virtually walk that neighborhood.
Right. Yeah, that's right. I mean, you got Google
So,
Maps,
I mean,
right?
you could virtually see the house, but this is true. You could use Google Maps,
Yeah.
But it's different, Google Maps versus you driving the neighborhood and seeing the community yourself.
So you've worked in the mortgage world for a long time, prior to getting into real estate, and we talked about this when it comes to home buying. What are some considerations for people when it comes to lending?
Well, it depends on what they're looking to accomplish because I cover the gamut. There's home purchasing, which is going to be the acquisition of the property. There is home refinancing for the purpose of reducing your interest rate. There is a cash out refinance where you're consolidating debt or maybe pulling cash out for an emergency renovation, a vacation, taking care of your family's event, or for whatever other reason. You have home equity lines of credit, which is going to be a second mortgage on your property, but the existing financing on your initial purchase stays intact. Then you have construction loans to build property. So I'm just covering some of the things that I service. It depends on what you need. So ultimately, having an idea and doing a discovery with a lender like myself can help formulate the best strategy based on your particular need and your particular financial picture. I think, Mike, one of the worst mistakes that someone can make is just taking someone that's not in the industry's word as gospel. It's good to get the information, but it's better to be able to get the full detailed guidelines from a bank's perspective than from someone that might be secondhand smoke. So that's the best way I can answer that question, is just knowing what is the need and then formulating the accurate plan around that need.
A lot of people, when they get into some money, they look at income properties, and that can be very, very lucrative. A lot of people have benefited from doing that. What are your thoughts on those? I know you and I have talked on the phone about this in the past, but just for our listeners, as far as an income property goes, it's definitely a commitment. It's not like buying an ETF and just letting it sit there and grow. There's more upkeep when you buy a property. You have to maintain it. You have to deal with certain things, tenants and things like that. What's your take on income properties for people that are trying to accumulate
Yeah,
wealth?
speaking from experience, it's definitely an adventure and it has its positives and negatives. But overall, I think it could be a great investment, or at least profitable for you, if you have calculated the numbers. That's really the most important thing. Knowing what your interest of knowing what the interest of acquiring that property looks like, and what is going to be the overall return on investment month after month, as well as what other expenses can be projected while holding that property. So with an investment property, I think it's important to take into consideration you're going to obviously have some kind of a mortgage on this home unless you're buying it cash.
It happened again, guys. I apologize. This is like 2 episodes in a row now, but we're having some tech issues. We can't always control what goes on because a lot of our guests are remote. In fact, all of them are. So we can't really control the internet connection. There's tech issues that just pop up. So Dahan Johnson is here with us again. Dahan, thanks for being here. You'll notice his background's different. He's still looking fresh. I got a different shirt on. It's a different day, but we're just picking this back up. Man, you look good. You look like you need to be like a news anchor somewhere, making like 7 figures or 8 figures right now.
Hey, you know what? Go ahead and contact Fox, CBS, NBC, CNN.
Yeah, man.
I'm ready. Just go ahead and give me that pundit position. As long as it comes with that pundit salary, I'll take it.
You look the part, man. Seriously, like you look so Wall Street right now. Like you're gonna drop some news on the Dow and the S&P today. Like you look like you're going all out. I love it, man. I love it. Now I got to step up my game because I'm kind of like falling to the wayside here.
Not at all, man. I've seen so many people that are well off that they dress very comfortably. They dress for their lifestyle. Athleisure is very in. I'm not always in a suit. Contrary to popular belief, this is part of my uniform, but I was told at a young age you want to dress the way you want to be addressed. So I keep that form in fashion. I do want to tell your entire audience, thank you for the patience and us having somewhat of a continuity with my background being different, but I did keep the outfit the same.
Yeah, it looks great, man. No, thanks for making the time again. And we were coming close to wrapping up, but we were getting into some really good information. And we were talking about home buying and finding the right home and the different drawbacks with real estate and trying to find a home.
Yeah.
And the other thing I wanted to cover with you before we wrapped up was just lending. That's another area of your expertise. You've been in the lending game a long time. What are some things for people to consider when they're looking for lending to finance that new home?
One of the most important things is to have an accurate look on your particular financial picture, because that's going to dictate what loan program and which direction to go into if buying a house truly is the best thing for you. Because the reality is, not every professional in this industry has the integrity of telling you no, because they're not compensated for a no. They're compensated for a closed deal. But your best first step is always understanding your financial picture. Just the discovery is going to be looking at a calculation of your income, your assets, what is your overall expenses that you do have, what's your position for a down payment, or do you need down payment assistance? Are you selling a home and taking equity from that property to buy a new property? Are you buying this property on your own? Are you buying it with a significant other or a spouse, or maybe another friend or family member? Because all of the players in this game will make a difference into what your desired outcome is and the strategy necessary. So that's number one. Number two is having a strong home buyer's consultation to prepare you for the process of buying a home. It's one thing to understand what the discovery looks like. It's another thing to look at all of the places throughout the marathon that you can anticipate, because this isn't a 100-meter dash. This is more like, running a mini marathon. The reality is you want to ensure, hey, what obstacles might I have? Who's all involved? If it's not just my lender and I am a buyer, who else is going to play a part in this transaction? I tell people to be prepared for that, so you know what to expect. And of course, if anyone's not following my channel, they can go to youtube.com, Dehan Develops, and one of my first, if not the first or second video, really lays out the home buying process. I would suggest doing that. It's free, and it will walk anyone step by step from the point that you show an interest to the moment that your loan funds and you get your keys. That's what I would suggest.
No, I appreciate that. And we're going to include that in the show notes. And that's helpful information for people out there looking for lending. We're in this weird time where interest rates got really high. They came down a little bit, but who knows where they're going to go from here. The economy's kind of all over the place. We're hearing different things from different political camps, that it's good right now, that it's not so good. It's really hard to say. We know inflation is still hitting people pretty hard. But, Dehan, how can people find you, man?
You can find me on all social platforms, Instagram, Facebook, as well as TikTok and YouTube at Dehan Develops. That's DehanDevelops. And before you end, I want to say thank you so much, Mike, for everything that you do and giving entrepreneurs, professionals, and anyone else that, has value to add to the people a platform like this, because oftentimes we perish or lack opportunities because we don't have the right information. And I know that you're an advocate to making sure that people have the right information, regardless if that's in the health field or technology or finances or therapy, relationships. You cover the gamut. I definitely have to give you your flowers and give you a big shout out. So thank you, brother.
No, I appreciate the love, man. Dehan Johnson, thanks for being here. And, we'll have to have you back. You got a lot of expertise in this area, and I'm sure we can dive into some deeper, subtopics within the whole lending game and the home buying game. There's so much to cover in that. Like, we could probably do a whole separate podcast just on that topic alone. So thanks for being here, and hope to have you back, man.
Thank you so much. I appreciate it, Mike. You have a great one.
Well, that'll do it for this edition. We're out of here. We want to hear from you guys. So drop us a comment. Let us know, are you an owner of a home? Are you looking at buying a home, your first home? Have you been in a home? What are your thoughts on the market right now? We love feedback from our viewers and listeners. So drop us a comment, drop us a like, and drop us a subscribe. Check us out always at MikeCPodcast.com. And until next time, thanks, guys. We're out of here.
The Mike C. Podcast.